Not really, Kiko. What happens is people tend to chase this news both ways. If you'll notice the negative days, they do the very same thing. And so it just depends on what happens. One of those tweets or a piece of news comes out somewhere and they think something's going to happen. We said a long time ago that China would be a long, drawn-out situation, not like Canada, Mexico, which was easy. They closed it really quickly. And it's a different game.
And as you pointed out, if you actually look at the S&P 500 a year ago, we're exactly where we were. It's almost a straight line.
It is, right. It's about actually January 2018, September of 19, and now even money.
How much of what we're seeing today has to do with just kind of the August trade? You know, we talk about this being a bit of a volatile month, not heavy volume per se. We're a few days away from a very long holiday weekend. I mean, 300 points based on comments coming out of China that are pretty consistent with what they said. I mean, is it really about the trade war today?
Probably not. I mean, I've probably been around longer than most people. What happens is you get down to 2 days before Labor Day, and a lot of the people are gone. And you find a lot more selling comes in September and October than you do in August and July a lot of times. I think it's because they get back and they look at things and then they say, you know what? I think we want to do something. Right now, they're probably, laying back on the beach somewhere.
You pointed to sort of this pack mentality that we're seeing in the market right now, everybody chasing a trade. What does that say in terms of where the mindset is for investors? We've talked a lot about the uncertainty that's hanging over. Are investors just kind of looking for yield somewhere? And is that why we're seeing the moves in that direction?
Well, I think they're confused, really, investors. They've seen these interest rates go a lot lower than they ever thought, and everybody had told them they wouldn't do it, and then they've gone a lot lower. I know for us, our biggest position the last year has been the 20-year Treasury, and we got a lot of heat for it in the beginning. But so now they're seeing it, and they don't know exactly what to do. And then if you look on the stock side, they're not going anywhere, and they look at all the turmoil in the world, and I think they're really confused. They're watching it, but they're not really doing anything.
They're confused in terms of the direction.
What to do, really.
In what to do.
Yeah.
On the economic front, we did get revised GDP today for the second quarter, revised down to 2%. What's your read on that number in terms of what it means for where the economy is headed?
Well, I think the second quarter was a bit of an anomaly because what happened is the thing that pressed it was the consumer spending, but their wages didn't go up. So they borrowed money to do the spending. That's not great on the long end. And we think everybody has a higher number than it will come in the third and fourth quarter. If you look, consensus is around 2% for the third and fourth quarter. I don't think we ever get there.
So given all the back and forth that we've seen over the last week on the trade issue, that's kind of overshadowed what happened last week with the commentary coming out of Jackson Hole. Jay Powell continuing to get hit by the president. He did sort of suggest that, look, there's only so much the central bank can do, especially in the face of what's happening on the trade war. Based on what you've heard, do you think that the Fed's trajectory has changed in any way?
I think they're a bit confused. He has a set
There's a lot of confusion.
Right, he has a set of people that I don't have their number. I've got the numbers in the office, but that are against a reducing rates here. I think the problem with that is they really need to. And if we think about it, if the overnight rate that you get is higher than the 30-year bond, you're going to have so many people from the overseas put money in our overnight paper. Right now it's about $300 billion, but think about that. Something has to change on that, and so my guess is they're probably at least 75 to 100 basis points, a full percentage point at least minimum above where they should be, and I doubt if they do that at the meeting.
So we're a few days away from the end of August. Looking ahead to what's going to happen in September, we've got the September 1st tariffs that are still set to take effect. There's still questions about whether, in fact, the Chinese will actually come to Washington on those trade negotiations as well. What are you looking at right now in terms of the outlook for that uncertainty to get resolved? You pointed to October 1st. The big military parade that's going to be held over in China to mark the anniversary of the PRC. Is that essentially a window that's closed right now? In other words, should we not be looking for any kind of development until after that, given that China wants to show its muscle?
I would guess that, because one of the things about China is you don't want them to be embarrassed if they give in to a lot of things between now and October, you get embarrassed, see, and they're going to be saying, "Hey, look at the 70-year regime and how fantastic it is," and it blows that up. And you have to remember, Hong Kong is another thing on their plate, and they have a lot of things going at one time.
So, in other words, don't expect to see any kind of concessions on the Chinese side.
I wouldn't expect that.
Okay, Ted, always good to have you on.
You bet.
Ted Oakley joining me here at the desk.